Hey, what's going on, guys? So this is just going to be an educational recap on our shorts that we've had previously here within SPY for the June 20th and June 30th expirations, one being a 50% win, the other one being a 130% win. First, we're going to go over the first short, which was deviation away from the 200-day within a very, very, very large bull gap here, right off of around 576 and right into May OPEX, right? So May OPEX is this candle right here, right? And then everyone was really bullish whenever we gapped up and we found the continuation. If you guys go take a look at the previous May OPEX, it was kind of nice with the continuation leading into that. And then we had a really nice period of like consolidation slash a little bit more of a sell-off from peak to trough of about 2.76%. So not anything too aggressive. And if you go back test throughout most of the May OPEX areas within the market, they're not, known to be anything that brings a lot of weakness to the market. It's not a very pivotal OPEX window just because, you typically don't have an absurd amount of open interest as you do in some of these other windows like December and January and whatnot. But we had an anomaly May OPEX that had very, very, very big amounts of positioning involved there, right? So when we take a look at this, we could see how one, from a level perspective, this was all just basically pushing back into the previous distribution zone. If you guys go over to the NASDAQ, you could see how this was also off of a big time progression gap from when we gapped down and then we held the gap down. This was the gap down's level. And then from there on out, what happened was we basically pulled back into that gap, held it as a support, found a higher low, went for the UTAD, and then cracked back beneath. This is where we kind of like broke our structure at, our higher low structure at on like smaller time frames, like your hourly or your 4 hour or whatever. They were trying to build out the higher lows, and then they cracked it on this day, followed by this cluster of price action that then led us to believe that up here was a solidified and confirmed UTAD, right? So we were holding right up against that level into May OPEX, right? And then right after May OPEX is whenever they came out with a Moody's downgrade, right? So this is whenever over here, if you guys take a look, Moody's downgrade was right after the May OPEX, right after a very, very bullish delta positive OPEX window here where all dealer positioning expired, right? And then you have no more flows that are driving the market higher from that expiration. And we had the expiration right down the road as well, which was Wednesday over here, which we're going to talk about that we saw that coming from a mile away. But we had the Moody's downgrade, okay? And that was not random at all to me. That was actually a very notable thing that was taking place, right? And if you guys go back into, you guys know how NWOGs work and whatnot. They typically like to fill around, like if it wants to be a really strong, like structural bounce trade, you would likely want to see some sort of accumulation taking place from the lower end of the chart into a really nice expansion about mid to end of week to fill some of the NWOG. What we more and less had here was a complete and total V-shaped recovery back into those highs, right? And we closed slightly above the previous day high, which is the Friday high, and the Friday close, right? So the NWOG was filled all the way by Monday, okay? So with all that being said, we had an NWOG fill from Monday, which is very, very weird. Everyone tries to call this a power trend type of candle. Everyone tries to call this something that, is really promising of continuation back to the upside. And quite frankly, it is not. The volume profile was actually ramping up a little bit towards the close, and most of the consolidation slash, higher lows slash continuation on smaller time frames intraday wise here, none of this was strong in terms of volume, right? So I really, had to dial in and really look at the tape, really look at what was their true money pushing the market higher from this point in time? Or are we just going through the same cycle once again of exhaustion as we did throughout, May OPEX, right? And could buyers exhaust at where they sold from the Friday close? Yes, they could, right? So we saw bidding happening lower. And if you guys go take a look at the regular trading hours of this point in time here with price action, the 15-minute I like to look at a little bit more. But basically, all we really had here was a support over here. And what we had was on the 4-hour, some sort of buy climax look on the higher highs, right? So if you guys take a look at the higher highs, none of this really looked too good. And then what we had was Vixpiration on Wednesday. So that's whenever I was really looking for about the midweek reversal, right? Because we already invalidated the NWOG for, if this were to bleed earlier into the beginning of the week, I would look for a reversal back into the gap. Just structurally how things move. They don't deviate far away from gaps most of the time, right? So, but that didn't happen. What we got was a fill immediately early week, right? So what happened subsequently to that was we had a lot of exhaustion happening on Tuesday, just like we were talking about. Buyers are going to get exhausted after the May OPEX flows are absent. We're getting a slight gap down here right now on futures. Nothing too crazy. Okay, so we go back over here and we can see how we had a lot of exhaustion, and then what we had was basically a flat trading day right beneath the May OPEX candle, right? So this is basically our invalidations point up here. We still continuously saw bidding lower in the dark pool. We still continuously saw not any sort of data that was supportive of it, anything bullish, right? But we still needed to get those volatility hedges off of the table here come Wednesday for the Vixpiration on the 21st, right? So funny enough, what we had was we had some bearish headlines starting to come out as we made a higher low right off of 592.82, which is also where they were placing sellers at from. And they left the gap unfilled, right? So they slightly left the gap unfilled here at 592.82. And basically what we had was absorption from the lower end of this chart as there was dark pool buyers sitting off of like the high 580s. Basically, if what I use is I use Tradietics. So when you take a look at this chart and you guys see, a lot of dark pool layers happening off of like right here, let's just say, right? The data's new, so it's not going to show the same data as what it used to show, but just say right off of around this on my cursor where, all of this was taking place here. What you would like to see was you would like to see, obviously, from that point, 588 being absorbed, and then obviously the sellers up here, which you could see highlighted in red, hitting the exchange, right? And then that would lead us to believe that, we have absorption from the lower end of the chart. They're putting in a lower high from, this tippy top, which could have been a UT or a UTAD. So right now, for the time being, we're looking for continuation to the downside, just because, we do have an exhaustion in price action, and essentially what we're looking for is a sweep of the NWOG or the opening print of the NWOG, right? So right around here is where we would be looking for. So right off of 581.45, and that's exactly what we got, followed by one more continuation into a gap down that swept the NWOG right into Thursday, right? So that was a really, really nice opportunity to be short over there. If you guys go over and you take a look at a lot of the Mag 7, NVIDIA was a very big time leader of everything taking place here within this distribution, well, within, the movement higher to the upside. And what we basically did was we basically UTADed on a smaller time frame, and the tape flipped very aggressively, as I noticed in the level 2, as we crept up above those highs. And then basically on the Nasdaq, what we also had was a lot of range built within this cluster of price action. It was a little bit different from the S&P since tech was leading and kind of preventing the market from a sell-off. So you would want to see what happens with the Nasdaq in terms of like a sweep of the highs and a failure over top. And basically what we got was another UTAD here on the indexes, followed by very large volume sells, right? And then those sells led to, subsequently no strong buyers the next following trading session, with a really weak, ugly looking close here into the Thursday session, followed by a gap down. So the swing trade for the June 20th expiration, a month of time, it was nothing stressful, nothing really to worry about. And what we did here was we bottomed out into the pre-market session, right off of just around that end walk, right? So very, very nice, easy target to target trading. Not anything that you could look at and say, oh, I want more continuation to the downside. You always have to remember topping is a process. It's not ever going to be easy to top, right? So with all of that being said, you have to wait for names to build out their whole entire distribution and then take it from there, right? Within Apple, within all these other names, you didn't have a lot of participation, I should say, within a lot of these tech names. You did kind of have it within NVIDIA, but it was a really nice UTAD on the NVIDIA to then go fill the 130 psych gap. And there's still a lot of gaps to fill in this, right? But basically what they had to do was, sell it off from the higher end of the chart to push it back lower to fill the gap, to gather full collection of inventory, to then be able to, reaccumulate and push it higher into the top of the deep seek gap and then resell it off for the earnings. I do think that this is going to, continuously carry on with its higher time frame distribution that has been taking place for quite some time, basically ever since June of last year. But this is just a smaller perspective, just for names to kind of cool off, and just for, the very, very bullish exposure to kind of ease off that was within tech and help the S&P kind of sell off. Another thesis that I had added on to this was banks, the illiquid sectors that sometimes give you off the signal before actual tech does, just because they can execute their orders a lot more easily within tech. If they know something is going to happen and they want to prepare for like a risk-off market, they'll sometimes sell off the banks, or banks will push into a spot where they are vulnerable to sell off, right? And this was a bear gap right here from the UTAD on XLF, right? So we had this range built within the Q1 distribution. And as you guys can see within the Q1 distribution, this was a really nice UTAD right here on this day, March 3rd. And if you guys go over into March 3rd within the S&P, you're able to see how March 3rd was a really nasty day and a really nasty lower high that faded all the way back down to the bottom. So we go back over to XLF, and if you guys take a look at, wait, was that March 3rd? Were these aligning? March 3rd, and on XLF we have March 3rd. Okay, yeah. So, yeah, this is a really nice depiction of distribution, right? And we left behind a gap, and we left behind a lower high that was not pushing into that gap. So we can see this to be a spot where you could start looking for signs of the market trying to sell off. And as you guys can see from the Moody's downgrade into the recovery, we actually filled the entirety of that gap on Monday, followed by a really nice sell into Wednesday. Wednesday was the day, obviously, that we did very, very well. And then the continuation into the 200 days, what was the sweep of this gap, was also very important. So now for this trading week, what we have was we had and we have a very, very notable ghost wick showing here. Down into 579, right? If you guys go take a look at 579, we never traded towards that. We have a fresh unfilled gap. And essentially, if you guys go over into ES, what you're going to be able to see is how it took the highs in the after hour session. And then what it did was it took those highs and then it sold off really aggressively throughout most of the pre-market session. This is why I always tell you guys, don't pay too much attention to just your what's the word, like just your futures at, like, 2 in the morning. There's no point. This was no volume, this was nothing. This was a simple headline that could easily be reversed, right? And sometimes these headlines come out to manipulate people's minds and be able to have fills as the counterparty, as the contrarian side. Just because, everyone is very euphoric of some sort of bull market happening, right? You have a very, very low uh, put to call skew. Um, I'm sorry, put to call ratio. You have a very low put to call ratio, right? And we're past the May OPEX. There's no Vanacharm flows here, and those return into the June window, right? So, this pop could be faded, right? And this could have all been in just a UTAD, and that's exactly what I called into the open. So we basically gapped up from a sell-off the previous day, which I didn't trim any of my short on. We gapped up only not even 1%, right? If you guys go over into the S&P, you're able to see how we gapped up from 587.70 into 593.20. We gapped up not even 1%, and we took out the May 28th high. And basically what I was telling you guys about was from the short, the previous short that we had. What we had over here was we had a very large dark pool seller stepping in off of 593, and that's where I added my short on Wednesday of last week, right? So that was a really nice opportunity for, in my opinion, some size on that. I was up like 20-something% into the close. I didn't take any trims. And then the next following day, I open up right towards my fills, right? So what happened was we essentially just full on out reversed this whole entire day of price action. And then what we did was we ran into a dark pool buyer off of basically the open of the NWAG, right? So this is the NWAG open right here. There was a layer of dark pool buyers bids here, which the market was falling into those bids off of around 586, 587-ish, and then there was essentially a ghost zone, meaning a lack of buyers up into lack of buyers all the way down into the next order being at like 583, right? So it was like a $4 ghost zone. The $4 ghost zone was leading us right into a gap fill sweep. Those orders hit the exchange right into Trump, and then I posted about the signature print that came in right as Trump was talking, right? So right here we had on Trading Ticks came through. It's only 8 prints, so it's not anything of notable size, but it just kind of gives you a hint as to like where the market can facilitate towards. Yes, the order says bearish, but if you guys know how I trade and you guys know how I look at things, the market moves to, the willing sellers that are there, that are willing to sell, right? And that's the only data we can see. There could be a lot more sellers there than just 8 prints and and 125.8 thousand shares at 590.10, right? And if you guys go over, funny enough, if you guys go over to that, you could see how price just facilitated its way all the way back up to 591, right? So that was a really nice, easy read to be able to scale at the sweep of this gap, right? And it completed through that ghost zone. So now essentially what I'll be looking for is just another short opportunity off of, like, if we go take a look at the dark pool, we can take a look and we can see where where the orders have came through at. We can see how there's a billion already lined up here at 590.10. So yeah, I mean, that's all we're really looking at here for the time being. That's basically where we closed from, and we're gapping down right now a little bit off of that, but not anything too notable. And then if you guys take a look at everything else, we had some decent orders coming in towards 594 would be like the top end of that on the 20th of May. So 594 is all the way up here towards this like bear gap that we have left unfilled, right? So we'll see what goes on. I don't really know everything that's going to happen here. I think that, your other charts within the market, like NVIDIA off of the DeepSeek gap, as you guys can see, a lot of these other names have been putting in really nice looks with really nice potential of mean reversions here to the downside. We had a lot of notable volume coming in, which I don't think is all buyer participants on Microsoft here. So with all that being said, guys, we are going to have to wait to see where the open is because there is not any true notable futures open, right? It's pretty flat. It's basically just trying to hold the afternoon move from the Trump talk, right? So we'll see where it opens at tomorrow, and then we could go from there.